The dollar has a massive macro edge. Let's break it down. I thought obviously, we've seen a couple of central bank decisions. We'll get onto that. I just want to touch upon dollar now, just in real time, because we are showing signs of resuming the upside momentum. Remember, we'd laid the foundations for this push to the north, 1, 2 consecutive weeks to the north. And that's because, remember, this triggered really thanks to gaining some further upside momentum thanks to the hawkish FOMC. And as I said before to you guys about that growing, the foundations were laid for that growing divergence. And it's really picking up some pace now. Obviously, we're seeing central banks cutting outside of the FOMC. Remember, the FOMC is still not talking about cutting rates yet right now. They're not talking about it. They're not giving any timeline or indication. Okay, so that is a massive edge and foundation that's being laid there for the dollar, which, the bulls are trying to use as a platform to push to the upside. Do you get that? Right? If other major central banks, such as the ECB, have started cutting rates, we've seen the SNB, obviously today, that's the second cut now from the SNB. See this growing divergence. We've obviously still, at the end of the day, got low rates in Japan, even though they're going to start lifting those away from zero because they're nothing at the moment. Bank of England, who have seen today, are getting closer towards a rate cut, perhaps, after the UK elections in August. Bank of Canada have started cutting rates. So there's a number of central banks that are cutting rates, and the FOMC are just not budging right now. Okay, they are not budging. They remain hawkish. That tone from that last rate decision was hawkish, right? And we said that because inflation remains stubborn. Inflation remains stubbornly high, and they express that. They really express that with explicit language that they're just not happy with where inflation's at right now, and there's still a lot of work to do. Remember, I showed you that thing. Inflation's around on an annualized basis. We're above 3%, about 3.3%. Inflation needs to be down around the 2% mark for them to be happy. And there's signs that things could still be sticky for them because the labor market remains tight. Remember, if the labor market is tight, right? Remember, if the labor market is tight, that's inflationary because we've got more people in the labor force, more people in the workforce. Wages are still generally decent. So we've got all these people still spending, stimulating prices. And of course, businesses are not going to put down the price of their goods and services. Do you understand that? So that's why all that spiel there is why the dollar has room. And I said to you guys, when we bounce here at this trend line, why we've got room to go and push to the upside here. On the daily, you get to see us breaking out. Well, if you go to the 4 hour, you can see us breaking out a bit of a flag actually now, trying to break out of a flag. Yeah, whatever we are. Look, bullish flag pattern there, bullish descending channel, however you want to look at it. Here's all of our pole of the flag. Here's the actual flag. And, as a rule of thumb, technically, for me, I'm always looking for, I'll go between the middle of the two trend lines there as the flag just to be conservative. Some people measure it all the way to the top. And then you're looking for the equivalent to a breakout to the upside. Now, that makes sense, doesn't it, guys? If we go on the higher time frame, this makes sense. It makes sense fundamentally. Guys, I can't stress enough how fundamentally strong and how macros are just in the favor of the greenback to the upside. Come on, man. We're seeing it. We've had further confirmation today with these rate cuts from other banks. The FOMC aren't entertaining anything. And the markets are still pressing. They want these cuts. Remember, they wanted cuts every month of this freaking year. How many have we seen? How many are expected to come now? One. We saw in the last rate decision now, when you look at the dot plot, one rate cut, as opposed to, 8 that we're looking at and potentially more, So the dollar has every right to go and, knock those bears, beat them to a bloody pulp, wrestle the bears, strangle them, like Khabib, strangle the bears. So pushing to the outside now. Anyway, as I get back to the point, technically here, we've got room for this to run into the mid 106 region. We're last up here, obviously, where we had this pullback here in towards the end of April, and previously there in October 2023. It has every right, to go and push to the upside there. With that being said, on the flip side with euro, just keep an eye. Obviously, we've got political pressures with euro, political uncertainty with obviously the French, the far right, as I said, that's still lingering there. The far right party gaining some traction, which is uncertainty for markets. And obviously, structurally, as we've gone over many times, euro just structurally remains bearish. The lower highs, the lower lows, lower highs, lower lows, lower high up here. And look, we're breaking out a bit of a bearish flag here today, right now, just at the time of recording this. And when we look, we're going to go and challenge potentially this 106 area, so long as we're going to keep an eye on these unemployment claims that are due out in the next 30 minutes. Okay, keep an eye on the unemployment claims. If they remain lower, okay, lower than expected, this should just carry on pushing to the south. Okay, we should see that heading in towards this 106 area. Go and challenge these lows of April. And then obviously further south, we'll go and print a new lower low, potentially in towards sort of 105 area, okay? So yeah, dollar really regathering some upside momentum. You could just see the momentum lost there for euro in this pullback, forming potentially sort of evening star there, being validated potentially with a closure below today. And obviously just resuming makes sense, right? There's vulnerabilities around euro on a macro level. There's a slowdown in comparison to US. There's not only a monetary policy divergence, there's also an economic divergence. The US is stronger. It's stronger. And it's not got these political, obviously, you come to November where we get the US elections. Right now, it hasn't got those political. It's a double whammy for euro. Lower rates, political uncertainty. It's a double whammy. Okay? So euro vulnerable, dollar maintains that edge. When we're explicitly looking here at euro dollar and just dollar in general. Okay, dollar maintains that edge. Guys, I hope you found value in that video. As a reminder, you see the way in which I think this invaluable knowledge, I call it invaluable because it's got me to where I am today and continues to serve me well. To have this level of knowledge, I put all my years of experience into a simplified course. I've broken everything down and made it super simple. There's hours of simplified lecture and practical as well. Understanding the macros, at a basic to advanced level, no matter your experience, and knowing how to use that knowledge and tie it in with the technicals. However you approach the market, whether you're a swing trader, a scalper, a day trader, however you approach the market, these macros will serve you well and be a beautiful complement, not even complement, a beautiful additional confluence to your trading, okay? And these macros as well will serve you so well in just your everyday life. I can't stress how much it's improved my life, my welfare, not my welfare, my wealth, my personal wealth, all that. Anyways, enough. Guys, smash out that subscribe button, smash out that like button. If you do want to check out the course, obviously you can via link in the description. Other than that, just enjoy these videos anyway. Stay lit, stay blessed, let's get it.